Hey, so welcome to the channel. I'm Harlan D. White, and on my channel, I'm currently documenting my journey of eliminating almost $50,000 in debt and sharing lessons I've been learning along the way. I've been on this journey about 12 months now, and I've been able to reduce my debt by a little over $43,000 so far. In today's video, I want to talk about cryptocurrency because overnight, literally, it has tanked. And if you've been following my journey, you know that up until earlier this year in late January timeframe, I had been focused solely on paying down debt. And then in the January timeframe, I decided to not only pay down debt, but also increase my giving as well as my investments. And most of my investments has gone towards cryptocurrency. And so even over the last week or so, crypto has been on a downward trend. And so I was looking at my portfolio yesterday, it was around $7,000. Wake up this morning, it's around $5,000. So really just want to jump on here today and talk about it from a person's perspective who is on a debt-free journey, whose desire is to, best use his money so that I can build wealth into the future. And so specifically, there was two areas in a video that I put out yesterday that caused me to cringe a little bit this morning, or actually I guess more so second doubt myself. And so there are some things that I may look to tweak in the future. So I want to talk about those things in this video. Let's jump into it. You just got to get started. All right, so the first area that I want to talk about that really triggered me this morning is where I have my emergency fund. In the video yesterday, I talked about how a large percentage of my emergency fund is in BlockFi, which I did a video about up here. And essentially, BlockFi is a online savings account where you can earn 8.6% interest on your stable coins, which essentially I treated that as cash because stable coins is a type of cryptocurrency, but it's pegged to the US dollar. So there isn't any fluctuation. There's very little fluctuation typically. However, one of the risks that I pointed out in that video is the counterparty risk because they're able to give money at an 8.6% interest because they loan that money out at a higher percent interest. And the risk is that they're not able to get those loans repaid. So the first thing I thought about this morning is like, oh man, with this quick crash, what if BlockFi is unable to get their loans repaid, and what happens to my money since it is not FDIC insured? And so that is one of the lessons that I think I've learned overnight is that I probably should have a larger percent of my money in a online savings account, high yield savings account with FDIC insurance since I'm in the US, and earning practically nothing versus having it in a more risky account like BlockFi. So definitely an eye opener. I'm not necessarily panicking. I'm assuming that everything will be all good with that going forward. However, I'll probably reallocate the mix there moving forward. And also, the second area that I kind of cringed at this morning, or I second doubted myself this morning, is where I was going through my budget and I mentioned how I pretty much went through the budget and was mainly trying to figure out how I can get money to put towards crypto investments. And so I set aside a little over $200. And of course, this morning with the crash, I'm like, man, first thought is like, man, I could have just put that $200 towards my debt. And then the second thought was like, man, or I could have just waited 2 or 3 days and then I could have been buying this dip. And so both thoughts were pretty much irrational because my investments into the cryptocurrency is for the long term and it is money that I don't intend on needing to touch for quite some time. And also, if I could predict the markets, then I would be, you know, a lot further along, I would think, financially in general. If I could predict whenever the stock market is going to go up or to crash, then I can make trades and it would be awesome. So the most important lesson there is that I need to continue to stick through my strategy of making sure I budget and then stick to my budget. So within my budget, I prioritize paying down debt. And then from going through all of my other categories, I come up with a bucket of money that I have that is more discretionary. And so the fact that I chose to put that money towards investing in crypto, and then it automatically, as soon as I put it in, goes straight down, that is not a bad thing. And so definitely trying to encourage myself, just stick to the strategy. But this is not financial advice. I am thankful that I didn't overextend myself and put money into what I consider the crypto bucket that I could not afford to lose. However, that is not the case with the money that I did put into BlockFi, which are in stable coins. And now I kind of see more of the risks putting it into BlockFi. I'm assuming everything will be all good, but now I'm able to go into it more eyes open. I still intend on investing more into crypto savings accounts, but just wanted to share this potential risk with you. I am now rambling. Hopefully, everyone else is not too worried about their crypto portfolios. Let me know in the comment section below. What is your thoughts of the recent crypto crash? Are you holding on with diamond hands? Have you already sold? And are you buying the dip? All right, that's it for today's video. Until next time.